Daniele Antonucci is chiefly responsible for covering Italy and other Mediterranean economies. He also helps formulate Eurozone growth and interest rate forecasts for the bank's equity and fixed income clients. He joins me live from Morgan Stanley's offices right here in London. Thanks so much for your time. Appreciate you being on the show. So I want to ask you what you make of these figures so far. I mean, Germany and France doing pretty well. The picture isn't so great for the likes of Spain and the smaller peripheral countries, though Spain actually did better than we expected. Do you think we are seeing a three-speed Europe now?
Yes, exactly. I think growth in Europe is being driven by core European countries, and Germany and France together are around 50% of the euro area. So that would suggest that we will also get an upside surprise at 10 London time with the euro area GDP, while mid-tier countries like Italy or Spain are still growing, but at a very sluggish pace. And we expect countries like Portugal or Greece to have continued to shrink in the first quarter and probably beyond. That's clearly the effect of the fiscal tightening, but also of deep-rooted structural problems, especially at the southern fringes of the euro area.
Now, for Italy, for 2011 as a whole, you're expecting the economy to expand by 1%. Is that correct? But there are risks slightly skewed to the downside. So, I mean, even now, so you're expecting Italy to be down from last year, but still a decent pace of growth compared with the rest of the Eurozone, the southern Eurozone.
Well, I think Italy has the advantage that the fiscal tightening that has to put in place is smaller than countries like Greece and Portugal because the budget deficit is narrower. But this GDP print suggests that risks are further skewed to the downside. Recent indicators, both coincident and forward-looking, in fact suggest that the economy has not really picked up between the first and the second quarter, so I wouldn't expect that much of an acceleration over the remainder of 2011. What's more, the external environment has just become less favorable. We still have a strong currency, still high energy prices, and of course the ECB has embarked on its own monetary policy tightening cycle.
You mentioned the strong currency. How much of a risk is a strengthening euro, not just the more vulnerable economies in the Eurozone, but also to the likes of Germany?
Well, it is a risk, of course, but competitiveness has not just to do with price competitiveness. It has also to do with non-price competitiveness factors, such as innovation, for instance. So, in my view, the southern European countries tend to be more vulnerable to exchange rate changes compared to more competitive countries like Germany.
Now, I wanted to ask you about a Bloomberg investor poll showing that 85% of the people that we spoke to this week said that Greece will probably default, and that could be closely followed by Portugal and Ireland, so they could suffer the same fate. One investor said he simply couldn't see a scenario in which these countries would get out of their debt problems. What are your thoughts on that?
Well, I think that there are a number of signposts that we have to look at. For now, the policymakers, in our view, seem to be adverse to a restructuring scenario. There is some openness to consider a maturity extension when the time is right, but we also have to look at the loss absorption capacity of the banks. They have recapitalized in some parts of Europe, but not on a grand scale, while they remain fragile, not just in Greece, for instance, but in many other countries. And also we have to look at contagion. One lesson that we learned from the crisis is that markets can easily recorrelate.
I mean, the thing, I guess it highlights the kind of tough challenges ahead for European policymakers. No matter what they're saying, they don't seem to be able to convince investors or the markets. And the view of the markets right now is that this situation is unsustainable.
Yeah, that is right. I think that there are challenges ahead, especially for Greece. But as I said, the key driver of this process will be politics, not just the economics. And it sounds that the political arguments are now arguing in favor of extra help for Greece in the near term.